Good turnaround Tuesday, Warriors. How's everyone doing?
Oh, wait, are you calling it, Coach? Are you calling it?
Calling it what?
You're calling it Turnaround Tuesday. You giving it to us?
Yeah, let's have one.
All right. Now
Yeah.
we're talking.
All right. So Alexander and Louise and Kman, I've heard of that guy before. AJ Nurhadi, you're a new name. Welcome to our community. Sinatra, Arnis, you too. Welcome. Mike Delfino, Mr. Capital Letters. Thank you. I'm pretty nearsighted, so I could read your message. And why don't we just start off with my trading warrior brother, Kman. Hi, Brand.
Hello, everybody.
So I know Ryan was long, he gutted it out here and rode this, and you were talking about how the Euro crosses were all holding up well. So nice work.
Yeah, and he did take some off close to the top, so that's a very good trade.
Yeah. So what are you thinking here? Was this kind of it? I mean, I could see how someone could say this is like ABC up to resistance, and it could be a flag, and that we could have one more flush. And coincidentally, Blake, the range is 2.5, right, from here to here, ballpark. And then if we take out this 2.5 from here, what do you think it gets us to?
I'm sorry, were you asking me?
Yeah, where do you think it takes us to if we take out the lows at 250 pip pop that we had? If we take it out, just subtracting the range gets us to the magic 102 level that we've been waiting for. So
oh, got it.
Yeah, so maybe that's in the cards sooner rather than later.
Well, we have two good days coming. One today with the PMIs, and then on Thursday with the combination ECB and the US GDP. So
yeah,
there's a possibility to finally break a few ranges.
Yeah. Okay. What's your bias?
I still think the dollar isn't dead. I know I've been saying that before, but I think today confirms that we are not, or the market at least is not ready to give the beast up completely yet. I'm looking at a few things like this euro dollar. We went through that 35.50 zone pretty easily on the yields coming off. Pretty good. What is it? Those 10-year futures double bottom there in the 105 as well. ZN. And
I mean, you have
the 5%. Yeah, basically the 5%. And but a lot is. I think a lot was a herd movement. You have a couple of well-known investors who come out with saying that they covered their short bonds, and then you have a bunch of followers thinking that they have to move out of them too. So you create that move, and today we're half undoing it in FX.
Yeah. I was talking about how this time the bonds were not confirming at making new lows here. I know some people are looking for 80, and maybe that's possible, and this is just 2. And in the 10-year, this looks like 2 to me, right? Confirmed high, diverged under 70, and one more push would be a 3. So potential reversal formations, TLT, kind of have a wedge, pretty glaring divergence there on the daily, multiple time frames. So I need divergence when I'm looking for turns on multiple time frames. There's a 4-hour. That's pretty glaring. You don't have to put your cursor up to see if it's at the same level. Even Mr. Magoo could see that. So anyone remember Mr. Magoo?
Yes, we do.
I remember Mr. Magoo.
All right. Anyway, I let him take my car last night. I'm a little worried about it. So that, the bonds are getting some flows. And
Yeah, exactly. I mean, that was what I was going to say. It went paired with pretty high volumes as well.
yeah,
But that doesn't mean the party is over, right? So we
yeah,
will see. We will see. I think there's if not PMIs today, there's going to be a very interesting read on those GDP numbers on Thursday, because they have been revised higher and higher and higher in the nowcasts.
yeah.
So there is room for disappointment there, but if they in turn print that high, then I think the dollar is ready for a comeback.
And I came in. I want to see. I want to see. And Dale, you see if you both have heard the same thing or seen the same thing that I have. I mean, everybody's calling for a bottom in TLT now. I mean, everybody.
Yeah, I mean that's
I
what
don't think I've
happens,
seen
right?
it. Yeah, I mean, everybody. I mean, I was getting alerts all day yesterday from people. Just the bottom's in. Yields are going to fall. So I just, it was a big chorus, I guess.
Yeah, so maybe we get that one more flush on some of the numbers we're going to get this week, but it won't confirm. Maybe it takes it out by 2. I actually bought this yesterday. It's a triple ETF on the TLT. And you know what? I'd welcome one more low, because I only put on, listen to this, everyone. I only put on part of my position. So, playing this for an eventual turn, I don't go all in when I saw this divergence here. I go, half, a third. And that way, if it makes a new low, you're not going, oh God, maybe it's a bad trade. You're going, oh, there's my opportunity to build my position. So,
And if it's exactly that, and if it's completely wrong, you only lose a third of what you would lose on a full one.
right. So, trade partials.
Yeah.
All the best, Stu.
Very
all
wise.
the best I know, trade partials. So what do you guys think about risk? We took out the 4205 level. It kind of looks like it was a stop hunt, and but I really wasn't that impressed. And even this morning there's selling coming in. I could see 4300. It's possible. But it didn't impress me. When you have a stop hunt, you'd have like a nice reversal day. And, just remember the old days when we were really in solid bull trends. We'd have a reversal day.
Dale, I think it's going to be one thing that we got to keep in mind is we are in the middle of earnings season, and we got Microsoft and Google.
See if they could save it.
Yeah, right. Yeah, well, that's after the close. We have Visa, which is going to be really important. It's almost as important, in my opinion, as like Amazon's earnings. You know what I mean? We're going to hear from Visa and MasterCard this week, and just kind of that really is going to give us a good idea of what the consumer's looking like.
I hope we get some good earnings reports. So there's a sale between 43 and 43.50. So I'd love to see good earnings take the market up. The point I'm making is you don't have a reversal day like this. After there was no power in it.
But like looking at yesterday's candle, that's a spinning top. So if we do get a rally today, let's say that the market does not give us a turnaround Tuesday, we're going to have a morning star formation. That's another thing to think about. That's a complete reversal for the rest of the week, usually.
Oh, okay.
If you think about it, right?
Yeah,
and then people will be double bottom and yada yada yada. You get a lot of that talk too.
Well, look where Apple held.
Yeah.
Okay. So under this 200-day opens the door for a big downside. So, I'll add on Apple up here at, 76 or so, because I do think that eventually we're going to take out this 200-day. My saying about trend lines and stuff, right?
Just I think they're made to be
that's
broken.
it. Yeah, that's their destiny. So, this was the NASDAQ's uptrend line from, the beginning of the year. And it looks like we cracked it. So anyway, this line, I could erase it now because it fulfilled its destiny.
Just a matter of time, Dale. Just a matter of time.
Yeah. So I don't know. I'm still, I guess, I'm still real bearish.
All right. Well,
Equity.
you want me to take over from here?
Yeah, yeah.
All right. Hey, Kman. Good morning, by the way.
Present.
Hello. I hear that Ryan is en route to your location. Is this true?
Well,
Hello?
yeah. He has a bit of a family day out in my location today, so we are going to meet up a little bit later.
That's so cool. That's great. I think that's awesome.
We don't live that far away from each other, about 30 miles or so, 25, 30 miles.
Oh, that's it? Oh, okay. For some reason, I was thinking you guys are like a couple hours away from each other.
No.
Well, then it's not that big of a deal. You guys can meet at the pub anytime.
Yeah, but we try to avoid, I mean, a bit of professional dedication,
Yeah.
Meet up at the pub every time, I wouldn't be sitting here.
Right. This is true. Good. I hear you. I can't drink beer or wine during the week, really. Except if the Diamondbacks, the Arizona Diamondbacks, which beat Philadelphia yesterday. Did you watch that game, Dale?
No.
It was a must win, and they're going to Game 7. And if they make it to the World Series, I might have to start drinking during the week over the next couple of weeks. But so that's just as if they make it to the World Series. But, well, there's a lot of work. Anyway, we have a young team and we're up against a really good team. Hey, look at the euro dollar, how it's consolidating here. And this is a big deal to me. Actually, here, I have it written here so you guys can read this from yesterday. This is the end of the day analysis. And I'll read it to you. I'll show you what the chart looks like, because it's the same chart that I upload.
Isn't that a flag?
Well, it is. So the break higher above the 106 levels opened the door for 107. I was short the euro, by the way. I got stopped out yesterday in a partial trade when we broke above 106.50. So I took a loss there yesterday. But the 50% retracement, 50 DMA, and channel resistance there may cap the rally. So that's at 107, and you can see it is, Dale, as you pointed out, it is developing a flag. Now, the high today was 106.94. So basically, you could argue that it held, right? So there's your flag. There's your flag that's developing. So that makes this level really important, 105.50. Now, Kman, you said something really key, and I agree. You're like, I wouldn't write off the dollar yet, or I wouldn't give up on the dollar's strength yet as well. And when you look at the dollar index, we've been looking at it as, we broke the triangle, but we have a big support zone here, and we could actually start just building a bull flag pattern as well. And that's the dollar index obviously is a mirror image for the most part of the euro. So I'm like you, Kman. I would not give up on the dollar just yet. And we saw the PMIs out of and I'd love to get your opinion here, but we got the PMIs out of Europe, a lot of the Eurozone, and the UK as well. We have PMIs today coming out of the US. How about if we get that, US exceptionalism today, like we've been getting so much of, where you see US data come in better, everybody else looks horrible. That's entirely possible. I'm not saying you should hang your hat on it, but we do have PMIs today. So, Kman, what are your thoughts about the Eurozone and UK PMIs that were released? Because I didn't think the UK PMIs were that bad, but boy, did we get a reversal.
Yeah, they weren't. But then in the mix, you had a little bit later that CBI trend coming out, which was, again, a pretty negative one. The Eurozone PMIs were on the weak side. Sorry, excuse me.
Yes.
So you had a bit of divergence in one or the other, but I think the levels that you showed there, they are spot on around that 106.95 figure, and the US yields also only showed us that one move, and I think it's really a combination of everything. And when we saw, and I'm always looking at the differentials, and the differentials went tighter between EU, US and UK, US also yesterday. But then this morning, from actually this morning, even around PMIs or even before the PMIs, the thing started to turn around, and we went back to levels prior to the bond recovery that we saw yesterday in the US. So it's all still very much short-term stuff going on over there, in my opinion. So yes, PMIs, they were on the soft side in Europe, a bit divergent with the UK, but all the numbers are sub 50, so they're still not in expansion territory, and the market, I mean, a lot of herd moves, I think, over the past 24, 48 hours. We said that the dollar didn't want to move up anymore. You know, remember end of last week? There's something going on, perhaps in FX, or FX not showing the latest rally in all those US yields, and then yesterday, I think there was a bit of a flush out, and this morning we're just coming back to the middle of our trading ranges and waiting for what's to happen.
You know, that's a great point that you bring up. That at the end of last week, we saw yields reaching for 5% in the U.S., but the dollar just was kind of stagnating, and there's a lot of people that cued in on that. Not only us, but I actually read some research from other people that were like, oh yeah, this is going to be a natural. The dollar's going to sell off if yields come off, and that's what happened yesterday. But that phenomenon you just said, and I kind of agree with you. It was like a dollar flush. Everybody kind of trading on that because they're like, well, if it couldn't go up when yields are going up, it's gonna get smashed when yields go down. But it did, at least for a day. But you know, now everybody's written off the dollar, and you know, when everybody writes off the dollar, you know,
I think it's a lot of herd mentality in there, and you know, when those, as I said at top of the show, when those, let's say, more experienced, long-term experienced bond traders say like they do something, then you have a whole host of followers trying to do the same thing, and that's really what happened yesterday. It was brewing at the end of last week. And then the dollar gave up that bit. The short term, at least, dollar gave up a little bit. But now we are virtually back to where we were, right in the middle of those ranges. So next, let's look at real data again.
Yeah, back to watching data, because that's what the Fed is making us do, right? Yeah, right. So hey, I'm going to ask Dale this. Dale, it seems, and I hate to say it like this, but it does. It seems like the you know, things in the Middle East are, I want to say quiet. Quiet's probably not a good word, right? And especially if you're in Israel or close to. But there's been some hostages being released. It seems like a good thing. That's something that, you know, I've been trying to cue in on because I know that if there's hostages being released, you know, that means that tensions are trying to come down. But I've read a lot of like kind of headlines that say, you know, that is not the case at all, and Israel is not negotiating. And I don't know. Have you heard anything or read anything that's got you thinking again about what's happening in Israel and Gaza?
You know, if you think about it, you know, there's also, they've evacuated all the towns and kibbutzes on the Lebanese border where Hezbollah was shooting missiles at them, and those people aren't coming back. So, you know, I believe a former ambassador to Israel, right now Hamas, which is not as strong as Hezbollah, is kind of like the varsity team for Iran. They have Hamas, you know, encircled and contained. And what they may do is turn their attention to the north and really take out the bigger threat. So I don't think the market would like it, because that's an expansion of hostilities, and, you know, they're a big client of Iran, and China sent 2 destroyers to hang out with all those aircraft carriers out there. it's like an accident waiting to happen. So
It's nice. It's
anyway.
like a little bathtub pool party over there.
Yeah,
Kman,
yeah.
but it sounded like you were going to say something.
Anyway,
Go ahead.
that's what I think might happen.
Got it. Thank you.
Yeah, apparently Netanyahu denied this this morning in a meeting with French President Macron. He said, "Our only aim is target is Hamas and not the North." So,
Well,
of course, we
that's for
don't.
sure.
We all just see the headlines, right?
Right.
We don't
Yeah,
know
I
what's
didn't
happening in the background, or what's been prepared, or whether it's just pleasing Macron because he wants to be the global peacemaker. But yeah, that's the line we got this morning, which actually put a little bit of positive risk on in the market as well, and that's why we see those euro crosses come back too, and gold come back.
Okay.
Yeah. All right. All right. Thank you. Appreciate that. And Matt, speaking of which, let's take a look around. We got a few minutes. I want to take a look around at some of the earnings that are coming out. S&P, as Dale, you pointed out, that 4,200 level, really big deal. You can see all the touches that we've had, and yeah, we hit a brief low. You know, relative strength was divergent. You can see it here, and just to be completely frank with you, if you just zoom out, I mean, just literally zoom out, we're pretty much in the middle of a long-term triangle. Like, it's sloppy. It's going to be sloppy here, right? Until we start getting some decisive, shoot, I can't even speak. It's 5 a.m. here. Divisive breaks one way or the other, but you can see 4,200 is basically in the middle of this big ass triangle that you see here that's been developed since, well, COVID, roughly, lockdowns, you know, and since we've come out of that. But anyway,
You know, you're also looking at about 4 months, 3-4 months of distribution, which is normal. And so if you were bearish during that time frame, you were an idiot, but because people were saying, oh, you know, the market's good, it's going higher. But sometimes it takes a long time to turn a battleship around.
Yeah,
and,
you know, and look, I'm more bearish than bullish. I think that we will get some sort of rally, but based on what's happening in the bond market, what's happening in the Middle East, unless things really subside, I have to imagine that we're probably going to trade closer to 4,000 versus getting back above 4,500 by the end of the year. I have to imagine that is we're going to be doing something, and I have to do some imagining here, but I think we're going to end up doing something like this towards the end of the year, like, you know, as you talk about November, December, you know, something like that. That's the way I'm viewing things, at least right now, unless something, you know, ultimately changes in the market. But let's a couple other things I wanted to point out. Well, Kman, you just brought up gold. So gold's going to be really interesting because, you know, we're capped at like 2,000. As we wrote in the analysis yesterday, I'll just make this real simple for you. You can let me get rid of this. You guys can't see that, but I'll just read it for you right here. Gold dips back to the 950 level, should offer support while we trade below the 2,000 level. And so, you know, 1950 is this breakout point. You can see this red line right here. Let me remove this little orange line here, but you can see this is a very Dale. I'm sorry, Dale. This is what Gregor would call a very impulsive move in the market, right? Ellioticians call that impulsive. So we're probably going to get a consolidation between 1950 and 2000 before, you know, a resumption of trend, if we're going to resume the uptrend. And you can see gold's finding buyers today as well. What's interesting is you're seeing gold rally. And what else is rallying with gold? The dollar, right? You're seeing gold and the dollar rally, and should be noted. And you can see even the dollar Mexican peso. You got Mexican pesos weaker today. So, you know, when I start seeing gold going up, dollars going up, now dollars going up probably more because the euro is going down, but you got the dollars firm, you got pesos that are weak. You know, volatility may be down right now, but, you know, how about if that starts to get perky? Then you have to start worrying about a little bit of risk aversion sprinkling, you know, through the markets. We got about 5 minutes left before we bring in Tracy, which I'm always excited to have Tracy here. But let me ask Kman, Kman, what are you thinking as we go into the, and by the way, we will be without Ryan for the remainder of the week. He's enjoying some family time. He's going to be meeting up with Kman and then some family time for the next couple of days. So it's just going to be the three of us here. But let me ask you this, Dale or Kman, what are you thinking for today? Looking around.
So the one pair, and Ben brought it up yesterday in the room as well, and I've been watching that Swissy with a lot of interest, especially when perhaps maximum stress goes a little bit away from the market. There's very, very good support there. Daily cloud, 89, the figure, and just below there is the 100-day moving average, if I'm correct. There is cloud support, there is horizontal support. So this is one that I'm keeping a very close eye on. Sorry, it held where it had to hold this morning, went briefly into the cloud, but then got rejected. So that's a pretty decent level there. I caught a knife, put on my butcher's glove, and caught the knife down there. What else? Well, if there's any divergence on the US PMIs versus the European, that is going to be the next one. If there isn't, if they come in weaker, let's say if they come in weaker, we're probably going to go back to those edges of the ranges that we have seen on stuff like perhaps cable, Swissy, Aussie, Kiwi. I don't know about the euro because the PMIs were a bit weak there too. If the euro has the strength to get up to 107. So that's for the day. What's worth noting as well is that we had this dip in dollar yen on the back of those yields lower, and yet another article saying that the Bank of Japan could tweak the YCC, and look what's happened. We had a 60-point move lower, and we are already nearly back to where we were before. So
yeah, that's all we got. It's just whoop right back.
That's one you for the time being you watch, and you look at it like a very slowly drying painting.
Yeah, I mean, I've been short this dollar yen for the last couple of days because I thought yields would hit 5%. When they did, I'd sell some dollar yen. I sold some, and I've been sitting in it, and I'm up 10 pips right now, but it's like unless I'm getting out in the middle of the night, it's just you would think it'd be a little bit more volatile, but yeah, I'm probably gonna just wipe it off my board, and yeah, I mean, it is sideways, right? They're really containing price action in the yen.
I don't know what's going on, but there's probably a lot of optionality. So the people who sell close to that 150 are okay to buy them back on the dips, and then rinse and repeat if it goes back up. So that's what keeping it here for the time being.
Yeah.
But let's hope that at least that US GDP and then the Bank of Japan next week can break those ranges so we can have some activity again.
Yeah, let's hope so. All right. Well, Dale, what do you think about these earnings? We got Microsoft coming up. Microsoft earnings are today after the close. I know you said, hopefully earnings will drive us higher. You can see Microsoft is just kind of, consolidating after that false breakout, from last quarter. It's kind of, giving it back a little bit. You got Google, it's kind of not making a new all-time high. You got Visa coming up. What are your thoughts here? What is there anything that look at this head and shoulder pattern, by the way, if you guys don't see
Sell everything.
Short it all, right? Short it all.
Yeah, especially mega cap tech.
Yeah, you can see that.
I mean, pull up Tesla. Tesla, if it rallies into the gap, I think that's a good shorting opportunity. We went right to a neckline, Tesla. So
yeah, that's a
240 to 250 if you had a bounce in there.
I think you'd be lucky to get that. I think you'd have to sell it right at the breakdown point here if you can get it.
Probably.
Yeah, I wouldn't even
measures that measures pretty deep. You know what? If we have a serious bear market, here's my big call. Tesla trades in 2 digits.
Ooh, well, that would be well, you know what? Hey, look, and I know we're gonna bring Tracy in.
It's not impossible.
It's not, and here's the thing. It's obviously Tesla has been priced for perfection for a long time, but I don't know if you've noticed, but there are no other electric vehicle EV makers that are slashing their prices quite like Tesla. And so that's going to come back and bite them in the ass. I know it's to garner sales, and but their margins are getting really squeezed. So I join you in that call that it will trade back into double digits again. So
a lot of the darlings traded above their 2021 highs. Microsoft did it, Apple did it, but you just showed Tesla. All it did was recover. Looked more like this whole year was a correction from its big decline.
Yeah. Well, I think if you really want to be a buyer, somewhere between 100 and 60 is probably, if you really are a Tesla believer, somewhere down there would be the place that I'd be a buyer. So anyway, hey, I want to thank everybody for being with us today. Make sure you all stick around, because we do have Tracy, Shy Girl. She's here, right? She's not here. She's not here yet. Oh, shoot. Well, then we can talk a little bit longer. She should be here hopefully
I'm doing
shortly.
my guest hunter.
Or you do the guest hunter. So, Kman, let's reverse back a little bit and let's talk a little bit. Well, if you're still here, are you still here?
Yeah.
Okay, cool. Let's talk about the Swissy a little bit, just because I am not trading the dollar Swiss. The dollar Swiss has come off, obviously, to the 50% retracement. We had that double top, broke this trend line. We hit previous support, as you pointed out. Cloud support's holding the Swissy, which seems logical, but we're trading below the 200-day moving average. I happen to be long Swiss, but I'm short Aussie Swiss, and I just shorted Euro Swiss today. But let me ask you this: if there's escalation in the Middle East, do you think? Well, okay, Dale says when, but do you think that the Swiss franc would gain more strength or the dollar? What are your thoughts here? Just off the cuff.
That's a good one. I think the Swiss should be a bigger driver. That's why I bought as close as possible to the support, and so my risk is very contained, very small. If there's a real escalation, I'm out of there, because I think the Swiss may move more than the dollar, perhaps. Because if it's a real economy breaker, if it spreads out, then you should have your yields be under pressure, actually, to the downside, and then Swiss should be a better play than the dollar. That's kind of my feeling on this situation right now.
And Jamie asked, what happens to the yen? And that's nothing. I think that's a good question, because we haven't seen the yen respond at all.
The yen is.
They've taken it away from us, those bastards.
Yeah, Jamie, I don't know if the yen should go higher, but it doesn't, and that's something that correlations come and go. And since the pandemic, since the other central banks have started to raise their interest rates, there is nothing. The yen has completely decorrelated from risk.
Just came in just to accentuate what you're saying. You can see it really right here. I mean, since there, the correlations are gone.
And then the correlation was very, very strong with the US yields for a time. But if you would overlay the dollar yen with the S&P, it is completely random. There is nothing to get from it right now. That correlation will probably come back at some stage, but that means that the Bank of Japan is going to have to start to move their tanker, and not like they are doing now, just 25 BPs here and there on the YCC, but really starting to move yields, interest rates. that's going to be the much bigger mover. But they are trapped because their government is putting stimulus package after stimulus package in place, and since they are cooperating closely, as been said, when Ueda took the seat at the Bank of Japan, I think Ueda is kind of trapped there, and they can hardly start to yank interest rates higher as the monetary policy. So I wouldn't trade. I still wouldn't trade yen on risk unless there is a very, very clear move by the Bank of Japan, and that could bring the correlation back very quickly. But for the time being, there is no correlation.
Yeah, okay. I'm thinking the same thing, and it's really, and Mike said it, and I agree. It's a yield move right now, and it has been for a long time, and that's what's watching, and that's what's moving it, and that's why I sold some dollar yen when yields hit 5%, or we came 4.99 last week. I sold some dollar yen, but it really hasn't moved it a lot, and not saying it won't, but I think people still think that yields are continuing higher for the most part, even though we've seen the big reversal that everybody's calling for yesterday. And and by the way, just so everybody can see this is an outside day on the US 10-year. We hit a new high. We hit the 161% extension. We reversed. We got a bearish outside day. It should theoretically, high probability of us moving lower in yields. But everybody's banking on it. Everybody's buying the bond market. Everybody's buying TLT. Everybody's saying, despite the oversupply, that's the valuations, the values there, need to buy 10-year, need to be. So need could mean that yields continue to go higher and bonds continue to get wrecked. So just be careful, especially if the PMIs come in worse than expected today. Dale, I still don't see Tracy. Do you see her?
Yeah, scaring me on my bond position, man.
Sorry.
I'll take a Valium. Anyway, no, she's not here.
Yeah, she might have accidentally slept in, which is weird for Tracy. She's always on point.
Yeah.
So
yeah.
So, well, maybe we'll just call and you can reach out, and she'll probably reach out to you and go, "Oh crap, I slept in," and reschedule. Maybe.
Yeah, sure. I'll see.
Yeah. Cool. Anything else that Dale? Any parting thoughts before we wrap things up for the day?
Yeah, I think that what happened last week in a lot of these mega cap stocks was just the first sign, and that rallies are going to be, I think, opportunities to sell, and I think the market's going to have trouble into year end.
I thought you were going to say what happens in Vegas stays in Vegas. I thought that's what was going to come out of your mouth, which is a true statement, by the way. Just so you all know.
I'll leave it with buying euro at 102 will be good for me and will be good for you.
Woo! I love it. I love it when Dale throws together a rhyme. Okay, man. Any last minute thoughts before we go?
Come on, where's your poem, buddy?
No, I mean, I really like it because it's a level that I'm keeping firmly in my mind as well.
Yeah. Okay.
Yeah, because my medium term.
It's hard to wait for it, but that's
it is.
That's what we do.
Yeah, exactly. Sometimes you have to be patient.
Yeah.
If you want to buy at 102, don't buy at 106.23.
Oh,
good
idea.
Good idea, Kman. And by the way, just so you guys can all see on a weekly chart, that the 102 level is the big golden fib, the 618 retracement. So in the event we make it down there, you're probably going to meet Dale's bid, Kman's bid, and hell, you might even meet my bid as well. So, all right.
All right, guys.
And if you look at it from the fundamental side, it could also be that move that is caused by some liquidity issues over the turn of the year. And that is actually my base idea, to have that last rush into the dollar and then reverse it for 2024.
All right. Well,
so you have already my early Christmas wish.
Early Christmas wish. Come on, Santa. Bring it to the ForexAnalytix team, please.
It's going to be a great time to buy a lot of different things towards the end of the year, in my view.
Right.
After tax selling and everything, get the games out of the way. But anyway, I believe our guests will be here tomorrow, or you'll have to fire them.
Who's the
Adem.
guest tomorrow?
Adem.
Oh, Adem. Okay, cool. He'll be. All right, guys.
So, I mean, you have leverage with the guy now. So anyway, all right, guys, well, have a great day trading. Listen, get in the room and hang out with pros, hang out with traders better than you. That's how you learn. That's how you grow. Don't be intimidated because you're not at their level. Be hungry to learn. All right, that's the end of my homily. Don't just count your pips, count your blessings, and the three musketeers will be here tomorrow. Guide you. Adios. See you, team. Thanks,
Ciao.
Kay.
Ciao,
Thanks,
Dale.
Blake.